Hey guys, we got a wild one today looking at one of the most volatile stocks. Probably already know what it is just from that. From recalls to a wild card of a CEO in Elon. It is Tesla. We're going to go ahead and take a look.
Alrighty, starting how we always do, making sure our Excel spreadsheet is set up the same way as the financial statements of the company here, being Tesla. So we have under revenues segmented by automotive sales, automotive regulatory credits, and then automotive leasing. And that's just the automotive section. And then we still have energy generations and storage, and then services and other. So that's going to be total revenues and then cost of revenues. Pretty much the same thing here. So still automotive sales, leasing, generation and storage, and services. We're just not including that regulatory credits in the cost of revenues. And then of course with operating expenses, pretty standard, R&D, SG&A, restructuring, and then income and income from operations. So that's going to be pretty standard as well. Interest income, interest expense, other income, loss, provision for income taxes, ultimately leading to net income, which is, of course, going to give us our operating margin. But they do have kind of an interesting thing here. Right under net income, there's net income attributable to non-controlling interests and redeemable non-controlling interests in subsidiaries. So kind of an interesting one there. Seems pretty specific to Tesla, but we've set ours up the same way. So we're going to go ahead and get into that. So looking at the different years we have here, 2020, 2021, 22, 23, and 24, we have all of our information on the income statement. So I'm just going to pull up just my spreadsheet and then we can walk through the actual numbers, which I have already populated these with some macros. So we can just go ahead and fill these in. Revenues, cost of operations, operating income, net income, earnings per share, and shares outstanding. So we can look at these a bit more closely here. How great are those automations in Excel, by the way? Super fun. Looks like we forgot to do the sum, so we'll just really quickly grab those, and that will populate all the way down. Sweet. So just a few things to point out. I feel like Tesla over the past couple of years has pretty steadily increased their revenue. You can see 31, 53, 81, 96, 97. So overall, pretty steady in that increase. The cost of revenues, likewise, are also going up pretty steadily as well, which of course is going to make the gross profit also increase. 2024, we did have a little bit of a down just for revenues and cost of revenues, just leading to a little bit of a decrease in gross profit, but still gaining overall. Although it does look like in 2022, we had a pretty big jump in the total cost of revenue up to 60. And so that led to some gross profit kind of peaking at 20K and then decreasing to the 17. So can definitely lead to some of the volatility that I think we'll be seeing of just kind of going up and down, and that'll obviously affect our buy, sell, or hold decision. But moving along to the operating income, pretty similarly, steadily increasing with 2022 peaking at that operating income and then decreasing the following 2 years. Net income likewise peaking in 2022, but we still have some increase in 2023. So that's pretty interesting, but kind of a big drop off here, almost in half in 2024. And then, of course, earnings per share, taking a closer look at this. So pretty steadily rising again, this time up until 2023 with a drop off in 2024. So that is pretty interesting. We can look at the shares outstanding as well. So those have been steadily rising, both basic and diluted. And then, of course, just to kind of understand the major parts where they're spending money. So this will be the revenues here, the sales column, and then the expenses as a percentage of sales. So nothing that's really sticking out as too large. R&D sits around 4%, SG&A kind of around 10, down to 8, down to 5. And then income before tax is a pretty big portion. So pretty interesting there, but we can jump down a little bit further into the percentage of sales, and working capital. I don't think anything's really sticking out as too abnormal. Pretty standard here, pretty standard growth going upward for pretty much everything: depreciation and amortization, CapEx, receivables, inventory, payables. Really just the changes in working capital are kind of all over the place, going up and down. So I'm sure that will pretty heavily affect the discounted cash flow on the next page. So getting into this page is actually super interesting for Tesla and actually gives quite a bit of insight into just what's going on with their stock in general, just being that it is so volatile. Just because you can look at these numbers here and basically see, so for revenue, pretty steady revenue growth. Operating income, we do have some fluctuations going up and down a little bit. Same with like interest expense, income before taxes, and ultimately net income. It does go up and down a little bit just through our projections over the next 10 years, but overall, nothing too crazy. Same with free cash flow. It does take a bit of a dip. Things seem to be going down around 2027, 2028, and then kind of climbing pretty steadily for the most part. So with these terminal discount rates and terminal free cash flow growth rates, I think that's really where things are going to come into play. And that's going to be just based off a lot of what you think about the company, how much you think it's going to be growing, and how much you think you should be discounting. So I think that just plays a lot into more of the qualitative aspect as compared to the quantitative, which is, of course, what we're looking at. But that's probably what is really going to come into play, looking at the leadership of the company, how people perceive Tesla as a whole, and some of those different factors that really play into it. So I think that's kind of the fun part of doing an analysis like this purely for the quantitative side of things. You can basically see the numbers are pretty standard and nothing too out of the ordinary or crazy. So a lot of that volatility seems to be coming from the qualitative aspect, which would, of course, be the leadership, the perception in the public of Tesla as a company, maybe environmental factors, just different things like that. So we can start to plug in the debt, cash, shares outstanding, and current share price to see what the decision would be to buy, sell, or hold just based on those numbers. But I think it'll be more interesting to play around with the terminal discount rate and the growth rate and really just see how that affects things. So we can come on down to the debt, cash, shares outstanding, and share price. And so we're going to look some of these numbers up. First, we're going to look at the debt here, which of course is on the balance sheet for the most recent full year. So that's going to put our debt at 122,070. Cash will be 16,139. Shares outstanding 3.22 billion. And then the current price 309.87, giving us an implied equity value per share of $317 with a 2.4% upside. And so that's going to give us a decision to hold currently, which does agree with just this Copilot kind of Google, based on 47 analysts, it looks like. So I think that's a pretty common perspective here, just because not really sure what's going to happen. Could go up, could go down. But what I think is most interesting is looking at, like I said, the different growth rates and discount rates here. So I'll zoom out a little bit and also try to make these a bit bigger so you can actually see when I'm messing around with these. There we go. So we're basically going to be looking at some of these numbers as we change these, but ultimately the share price, and that'll affect our buy, sell, or hold decision. So based on my research, it looked like around 6 kind of 10% would be an acceptable discount rate for Tesla. So if we're just looking at discount rate by itself, that goes up to 8. You can see this really drops down to 260. So that would obviously be a sell at the moment, just because we have a current price that's super overvalued. Going a bit more here to 9%, drops even further to $220 as the implied shared price, then all the way up to 10% down to 191. So you can see that really makes a big difference even for such a small change in the discount rate. If we come back down to say 7% where we started and we look back at the growth rate. Currently doing 2.5, so we bump that up to 3. So these free cash flows, revenue, free cash flow is really going to increase, and that's going to bump this implied share price up to 355. Say we go up to 4%, that's going to take it up even further to 468. And then maybe we look just at 5% as well. So that'll go up to almost $700. So quite a bit of fluctuation there, just changing those numbers by a little bit. I think we're going to end our analysis with the numbers I'd originally put in here. So the 7 and 2.5. And so like I said, that'll give us an implied equity price of 317, just above what it's currently at. Could be a hold for now, but of course with Tesla, who knows?
Hope you enjoyed that one. Thought that was super interesting. One of the more interesting ones just because it really points to the fact that a lot of Tesla's volatility is coming from the qualitative factors as opposed to the quantitative, just the leadership in place, a lot of the maybe environmental things going on with Tesla, or, a lot of other factors at play. So thanks for checking it out.